Hi everyone, my name is Gerald, and today I'm going to share more about the Astrea 9 PE bonds, or otherwise known as the Astrea 9 private equity bonds. So over the past week, I've seen quite a lot of discussion about the bond issuance, including what is the bond about, how do we subscribe to the bond, as well as what are some of the risks involved in applying for the bonds. So I'll share that with all the viewers today, and hopefully with that, we'll get a better understanding of the Astrea 9 PE bonds. So I'll start by giving a quick introduction about myself. My name is Gerald. I'm the founder of 𝗵𝗲𝗰𝗹𝘂𝗀𝗀, and we offer you financial insights on Singapore stocks, bonds, REITs, and ETFs. You'll be able to find more of our insights on our website, 𝗵𝗲𝗰𝗹𝘂𝗀𝗀.com, as well as our social media channels. Do subscribe to our YouTube video as well, where you'll be able to get more regular updates. I also wanted to share a disclaimer that today's sharing is for informational purposes only and is not tailored to your investment objectives and risk appetite. So do speak to your financial advisor to be able to understand whether you should be buying this specific issuance. So I'll start with a quick introduction about the Astrea 9 PE bonds. There are two classes of the Astrea 9 PE bonds as part of this public offer for retail investors. First, we have the Class A1 bonds with an issuance size of 380 million, and this offers an interest rate of 3.4% per annum. We see here a scheduled call date and a final maturity date. So the scheduled call date is 5 years from the expected issuance date, and that would be 8th August 2030. And we have a final maturity date, which is 15 years from the expected issuance date, which is 8th August 2040. I'll explain in more detail what this call date and final maturity date actually means. Next, we also have the Class A2 bonds with an issuance size of 50 million US dollars and offering an interest rate of 5.7% per annum. So next, I will go into more detail about the Class A1 bonds. So here we see that the Class A1 bonds, the total offering size is 615 million Sing dollars, and that consists of the public offer of 380 million, as well as a placement of 235 million, which is offered to institutional as well as accredited investors. I mentioned earlier that it offers an interest rate of 3.4% per annum, and the interest will be paid semi-annually. There is a mandatory call after 5 years, and that would be on the 8th of August 2030 if certain conditions are met. If the issuer does not redeem the bond after 5 years, then there is a one-time interest step-up of 1% per annum. The bonds have a legal maturity of 15 years, which means that they will mature 15 years from the expected issuance date, and that will put it to be on the 8th of August 2040. If I'm looking at the credit rating of the Class A1 bond, they are expected to have a A+ rating by one of the credit rating agencies, Fitch. And what this means is that it is perceived to be of an investment grade credit rating. Next, we come to the Class A2 bonds, which would be amounting to 200 million US dollars, comprising of the public offer of 50 million US dollars, as well as a placement of 100 million US dollars. So once again, the placement is offered only to institutional as well as accredited investors. The Class A2 bond offer an interest rate of 5.7% per annum, and this interest is expected to be paid out on a semi-annual basis. Like the Class A1 bonds, there is a mandatory call after 5 years if certain conditions are met, and if the bond is not redeemed after 5 years, then there will be a one-time interest step-up of 1% per annum. Like the Class A1 bond, the legal maturity is 15 years, and that would be on the 8th of August 2040. and the expected credit rating of the Class A2 bonds is A. We should still put it at the investment grade rating, but slightly below the Class A1 bonds. So I have discussed the Class A1 bond as well as the Class A2 bond. This is a table that summarizes both classes of the 𝗲𝗄𝗃 PE bonds that are part of the public offer and put them side by side for comparison purposes. You might also have seen this Class B PIK bonds as part of the 𝗲𝗄𝗃 PE bond offering, but this is actually not part of the public offer. But what we can see here is that the Class B PIK bond would have a principal amount of $100 million, which would bring the total 𝗲𝗄𝗃 PE bonds to an issuance size of $780 million. So I'll bring up this $780 million once again later when we are looking at the loan to value ratio of the entire 𝗲𝗄𝗃 PE offering. So to help us understand the bonds a bit better, we can first look at the issuer of the bonds, which is Auxilia, and they are a wholly owned subsidiary of Severa Holdings Private Limited and indirectly owned by Temasek Holdings. However, it is important to note that the bonds are not guaranteed by any entity, including Temasek Holdings. What I can also see here is that Auxilia has been established since 2015, and their mandate is mainly to broaden investor access towards private equity, and they have an asset under management of $11 billion as of 31st December 2024. So since 2016, Auxilia has successfully launched 6 series of the Astrea PE bonds. If you have been subscribing to the previous Astrea PE bonds, then maybe the 𝗲𝗄𝗃 PE bonds may not be something that is entirely foreign to you. So we saw that in 2016, the first listed PE bond on the SGX with the Astrea 3 PE bonds. And subsequently, we saw the Astrea 4 bonds in 2018, which was the first listed retail PE bond on the SGX. Last year in 2024, we saw the issuance of the Astrea 8 PE bond, which was the 5th listed retail PE bond on the SGX. And with the Astrea 9 PE bond, that is expected to be the 6th listed retail PE bond on the SGX. So with the previous issuances of the Astrea PE bonds, we can look at their past performance to be able to determine the track record of the issuer. So looking at the comparison table here, what actually stands out to me is that for Astrea 3, Astrea 4, as well as Astrea 5, all classes of the PE bonds have been fully redeemed. So that may provide some degree of comfort towards the ability of the issuer to be able to redeem the PE bonds when they have the opportunity to be doing so. Okay, next, we will dive deeper to understand more about the Astrea 9 PE bonds and what do they actually constitute, because private equity bonds might be something that is new for many of us here. So what I'll try to explain would be what this portfolio of private equity bonds actually are and what do they actually mean for us as investors. So the Astrea 9 PE bonds will be backed by cash flows from 40 private equity funds, which are effectively funds that would invest in these companies that are privately owned. Across these 40 funds, they would be investing in a total of 1,086 companies, and this would be across different industries as well as geographies. We can look at the breakdown of where these companies are in terms of the sectors. And in terms of the key sectors for the investee companies, the IT sector would represent the largest sector, representing about 31% of the total portfolio. And then next we have got industrials, which represent 21% of the portfolio, and healthcare would represent 15% of the entire portfolio. Next, we can also look at the breakdown of the portfolio companies by geography. And what we see here is that the US private companies would represent 66% of the portfolio. So this is understandable given that the US private equity market is the most developed. Next, we see that in terms of the portfolio breakdown, Europe will represent 26% of the portfolio, and Asia would represent 8% of the portfolio. So I mentioned earlier that for Astrea 9, the cash flow will be coming through from a portfolio of 40 private equity funds. And we can also try to understand whether there is significant concentration towards specific fund managers as well as investments. So what we see here is that in terms of the exposure to different fund managers, there isn't one fund manager that will represent more than 6% of the entire portfolio. In terms of the different fund investments, there is also no single fund that represents more than 4% of the entire portfolio. Another commonly asked question would be, what would be some of the strategies being adopted by these private equity funds? So what we see here is that 83% of the funds would be buyout funds. And the reason behind that, as provided by the issuer, is that the buyout strategy has the strongest historical performance amongst the various private equity strategies. The remaining 17% of the portfolio would be adopting a growth strategy. The other way to understand more about the portfolio of private equity funds is to look at its vintage year. And what this vintage year actually tells us would be when the fund was actually launched. So what we see here in terms of the years where we have more of the funds being launched would be in 2019 and 2020, where we have about 26% of the portfolio being launched in each of these 2 years. Subsequently, we also have some of the funds from 2018 as well as the 2021 vintage. And what this means is that the weighted average fund age is 5.5 years. Okay, why is this 5.5 years important? That is because the mature funds are more likely to generate cash flow. Okay, so if I'm thinking about some of the funds that might be investing in very young companies, they may not be at a point in time where the funds are able to exit some of these investments as yet, and hence be able to generate cash flow for their investors. So this is what we see in terms of the private equity J-curve effect, where the net cash flows are expected to accelerate from year 5 onwards. And what we see here is that the mature funds are then more likely to be able to generate the cash flow for their investors. So the question that you might have is probably, okay, this actually involves private equity rather than companies that are listed on the public exchanges. They are typically seen to be more high risk compared to some of the public equity investments that we have access to. So what are some of the safeguards that are in place to be able to lower the potential risk for investors? So there are 3 structural safeguards that have been put in place for investors of the Astrea 9 PE bond. The first is reserve account. The second is maximum loan to value ratio. And number 3 is the credit facility. So for the reserve account, we have the cash built up to be able to repay the principal amount of the Class A1 bond and the Class A2 bond. Next, we have a maximum loan to value ratio, which is a limit to the amount of debt that the manager can actually take on. If it actually surpasses this debt level, then the manager needs to undertake certain action. Next, we have the credit facility to be able to fund certain expenses and capital call if a cash shortfall actually occurs. So from the cash flow that is generated from the various private equity funds, they would first be used to pay certain key expenses as well as bondholders' interest. If there is excess after paying the key expenses and the bondholder interest, they will then be paid into a reserve account, and the cash is actually reserved for the principal repayment of Class A1 bonds and Class A2 bonds in the scheduled call date on the 8th of August 2030. Only after paying into the reserve account will the cash flow be used to pay other expenses as well as equity investors. So I shared earlier that the net asset value of the entire portfolio of 40 private equity funds is at 1.625 billion US dollars. So I shared earlier the issuance of the Astrea 9 PE bonds, including the Class A1 bonds of 615 million Singapore dollars, the Class A2 bonds of 200 million US dollars, and the Class B PIK bonds of 100 million US dollars. So adding all of this up, what this means is that the loan to value ratio of the entire portfolio would be at 48%. Which is below the loan to value ratio of 50%. What this also means is that if I look at the portfolio net asset value, it is more than 2 times the total bonds being issued. Or to look at it in another way, it would mean that the portfolio needs to lose 52% of the value before bondholders are actually impacted, because the equity held by the sponsor would be impacted if there is going to be a decline in the net asset value before the bondholders are going to be potentially impacted. And if I were to look at who the owner of the equity of this portfolio is, that is actually the sponsor, Auxilia Group, which owns 100% of the equity, and they will be taking the first loss if there's going to be a decline in the net asset value of this entire portfolio. Last but not least, we have the credit facility, where in the event of any potential cash shortfall, the issuer will be able to draw on this facility to be able to fund certain expenses. So this can potentially include the unpaid accrued interest on the Class A1 as well as the Class A2 bonds. However, it is important to note that the credit facility cannot be used to repay the principal amount on the bonds. So despite all the structural safeguards that are in place, I think it is important to realize that there are still risks relating to investing in the Astrea 9 PE bonds. After all, we often say that all investments come with risk. And I think this is especially the case given that the underlying assets are private equity funds. So the first risk I will highlight is the investment risk, in that the amount and timing of distributions from the private equity funds are uncertain. The private equity funds will need to be able to realize their investment in the private companies, and that is something that will depend on the economic conditions. If we see a very significant economic slowdown, that may actually impact the ability of the funds to be able to do so. So the next risk is the market risk, which is that if there's going to be a significant deterioration in economic conditions, then what this may happen is that there's going to be a fall in the private equity asset valuations, and likewise a decline in the deal activity. So once again, this will make it difficult for the private equity funds to be able to realize the value of the assets. Next, the risk is leverage risk. So private equity funds use a significant amount of leverage, and what this means is that that will effectively increase the extent that some of these investee companies will be impacted by a deterioration in the economic conditions. The fourth risk is liquidity risk. So while the Astrea 9 PE bonds will be trading on the SGX, the trading market for these bonds may be limited. So if you are looking to potentially exit your investment in the Astrea 9 PE bond, what this means is that you may not actually get the price that you want to exit at. The next risk that I wanted to highlight, especially for Class A2 bondholders, would be foreign currency risk. This is because the Class A2 bonds are US dollar denominated, which means that if your investment currency base is not in US dollar, you would then be subject to exchange rate fluctuations. So this is especially important to highlight since we have seen significant volatility in the US dollar versus the Singapore dollar since the start of this year. So what we see here is that with the threat of US tariffs, with the announcement of tariffs earlier this year, the US dollar has weakened against the Singapore dollar. And if it continues to do so, and you eventually want to be exiting your investment in the Astrea Class A2 bond, when you subsequently translate the currency back to Singapore dollars, that may mean potential losses in Singapore dollar terms, even if the value of the bond in US dollar term were to stay the same. So having looked at some of the features of the Astrea 9 PE bonds, as well as the risks involved in investing in the bonds, I think the next question is the interest rate that's being offered attractive, especially when compared to other options that might be available in the market? So one of the things that I will do is to compare the interest rate offered by the Astrea 9 PE bond with existing Astrea PE bond issuances, including the Astrea 8 Class A1 bond, as well as the Astrea 7 Class A1 bond. Because both of them are publicly traded, we can refer to their current price, the bid price, the ask price, to be able to see what are the prices that we have to pay, what are the yields that we are able to get if we actually buy the Astrea 7 and Astrea 8 bonds in the public market today. So as I shared earlier, the Astrea 9 Class A1 bond offers a yield of 3.4%. So we can compare that to the Astrea 8 Class A1 bond. And what I see here, if I were to look at the yield to call, which is effectively what is the yield that you get on an annual basis until the time that the call date is. And for the Astrea 8 Class A1 bond, that will be 4 years from today. What we see is that the yield to call is at 2.79%. If I look at the Astrea 7 Class A1 bond, then the yield to call would be at 2.58%. And what is important to note here is that for the Astrea 7 Class A1 bond, the time from now until the call date is actually 1.8 years. So if I were to look at the Astrea 9 Class A1 bond, 3.4% yield, that is actually above the yield offered by the Astrea 7 Class A1 bond, as well as the Astrea 8 Class A1 bond. However, it is important to note that the Astrea 9 Class A1 bond has a longer time to call compared to the Astrea 8 Class A1 bond, as well as the Astrea 7 Class A1 bond. The other comparison that we can make would be to the Singapore government bond. And what we can do is to compare the Astrea 9 Class A1 bond, which has a period of 5 years before the first call date, with the 5-year Singapore government bond. So if I were to look at the latest data from the MAS, the 5-year government bond yield was at 1.78% as of 31st July 2025. And based on the yield of the Astrea 9 Class A1 bond of 3.4%, that represents a 1.62% higher spread compared to the Singapore 5-year government bond yield. So this is something that is worth noting in that for the Singapore government bond, it is typically seen as being lower risk compared to the Astrea PE bonds, because the Singapore government bond is actually backed by the Singapore government, while for the Astrea 9 PE bonds, as I've shared earlier, the underlying asset would actually be private equity funds. Next, we can look at the Astrea 9 Class A2 bonds. So earlier I shared that the yield on the Astrea 9 Class A2 bond is at 5.7%. So once again, I can compare that to the Astrea 8 Class A2 bond, and based on the data that I see, the Astrea 8 Class A2 bond has a yield to call of 4.48%, which means that if you were to buy the Astrea 8 Class A2 bond in the open market today, you'll get an average yield of 4.48% per annum until the call date, which is in 2029, which is 4 years from today. Okay, so once again, in this case, the yield of the Astrea 9 Class A2 bond is higher than the yield on the Astrea 8 Class A2 bond. Next, we can also compare the Astrea 9 Class A2 bond with the US government bond yield. What is important to note here is that because the Astrea 9 Class A2 bond is in US dollars, we compare it to the US government bond yield rather than the Singapore government bond yield. So what I see here for the US 5-year government bond yield is 3.96% as at 31st July 2025. So if I were to look at the Astrea 9 Class A2 bond, that has a yield of 5.7%. So effectively, the spread over the US government bond yield is 1.74%. So what we have seen here over the past few months is that the US government bond yields have been very volatile. Depending on the economic data that's come out, whether is it the jobs data or the inflation data, we have seen fairly so that is one important factor that I will take into consideration when thinking about the buffer that I require in terms of the yield that I'm getting from the Astrea 9 PE bond versus what I'll be able to get via the US government bond yield. Okay, so if you're interested in applying for the Astrea 9 PE bonds, I'll share how you can actually do so. So for the Class A1 bond, you can apply in multiples of 1,000 Singapore dollars with a minimum investment of 2,000 Singapore dollars. For Class A2 bonds, because they are denominated in US dollar, you need to apply in multiples of 1,000 US dollars with a minimum of 2,000 US dollars. So to be able to apply, you can access the ATM, mobile banking, or internet banking websites of DBS or POSB, OCBC, as well as UOB. So some of the key dates to take note of if you are interested in applying for the Astrea 9 PE bond. The application for the Astrea 9 PE bond opened on 31st of July, and it will close at 12 noon on 6th of August, which is a Wednesday. The trading of the Astrea 9 PE bonds is expected on the 11th of August, which is a Monday. Okay, so the other question that we commonly get is how much allotment can we potentially get with the Astrea 9 PE bond? So one thing that we can refer to would be the allotment result for the Astrea 8 PE bonds. And what we see here is that for applications of below $50,000 or up to $49,000, the balloting ratio is on a 1-to-1 ratio. Okay, so what this means is that anyone who applied for less than 49,000 Singapore dollars worth of the Astrea 8 Class A1 bond would actually get the Astrea 8 Class A1 bond as part of the public offer. However, the amount of the Astrea 8 PE bonds that they receive will be based on how much of the bonds they actually applied for. So for those who applied for $9,000 and below, they will get the amount that they applied for. If they applied for $30,000 to $49,000 worth of the Astrea 8 Class A1 bond, then they would be getting just $10,000 worth of the Class A1 bonds. Okay, and then for those who actually applied for $50,000 and above of the Astrea 8 Class A1 bond, the balloting ratio is on a 1-to-2 basis, which means that not everyone would then receive the allotment of the Astrea 8 Class A1 bond. And once again, we see that the amount that is allocated to every successful applicant would be lower than their application amount. So what we see here as an example for someone who applied for $50,000 worth of the Astrea 8 Class A1 bond is that if the person is successful in applying for the bonds, he or she would just get an allotment of $24,000 worth of the Class A1 bonds. However, do note that this is the balloting results for the Astrea 8 Class A1 bonds, and the actual result of the Astrea 9 Class A1 bonds may actually differ. Next, we look at the allotment result of the Astrea 8 Class A2 bonds, and what we see here is that for applicants who applied for less than $50,000 worth of the Astrea 8 Class A2 bonds, the balloting ratio is on a 1-to-1 basis. However, what we see here is that for applicants who applied for less than $50,000 worth of the Astrea 8 Class A2 bonds, their allotment of the bond would be between $4,000 to $7,000. For applicants who applied for more than $50,000 of the Astrea 8 Class A2 bond, the balloting ratio is on a 1-to-2 basis. And what we see here is that the allotment would be significantly lower than the amount that they applied for. So what can we learn from the balloting results of the Astrea 8 PE bonds? Effectively, what we have seen there is that you have a higher chance of getting an allocation if you apply for less than $50,000 worth of the Class A1 bonds and less than $50,000 worth of the Class A2 bonds. So to summarize, I believe the Astrea 9 PE bonds do look attractive if I'm looking for regular income over a longer duration. This especially so given the track record of past Astrea bond issuances, as well as some of the structural safeguards that are in place that I shared earlier. Between the Class A1 bond and the Class A2 bond, I prefer the Class A1 bond, given that it actually offers a higher yield compared to the existing Astrea Singapore dollar issuances. And at the same time, I will not be subject to a significant currency risk compared to if I were holding to the Class A2 bonds that are denominated in US dollar terms. So if you'd like to find out more about the Astrea 9 PE bond, do visit our website, 𝗵𝗵𝗃𝗀𝗃.com, as well as follow us on our various social media channels. Subscribe to our YouTube channel, where we want to be providing you with more updates on the Astrea PE bonds, as well as other investment opportunities in the Singapore market. So thanks so much for joining us once again. And if you have any questions, do leave a comment in the YouTube channel. Once again, my name is Gerald, and I hope to see you again the next time.